What's good, y'all? So this is how I made $355 trading the NASDAQ today. So let's get right into the charts. So the first thing you'll see, I have the NASDAQ here pulled up on the weekly chart. So this is how the market closed last Friday. So this is kind of how we looked at the end of last week. And so the first thing you should note on this chart is that we had a huge wick on the last week's candle. It was a huge discount wick. Whenever we have a wick that size or that long, we need to grade this wick, right? So we need to put a Fibonacci retracement and find the midpoint or consequent encroachment of this wick. So it's very important to be able to identify that. So the midpoint of any wick is always an important level to watch to see if the market wants to use that level as support or resistance. And so wicks act as fair value gaps essentially. So it's important to kind of be aware of that midpoint in the same way you'd be aware of the midpoint of a fair value gap. So that's kind of the weekly narrative. Now, if we go to a daily chart, the first thing you'll notice here on the daily chart is that we had a daily wick from last Monday as well. So that's another level we'll want to grade and identify as something potentially to watch for today. And that was something that the market traded into in the overnight London session last night, going into this morning session today. So that was an important level to mark. You can see we traded right into it, and I'll show you on a lower time frame in a second. But another thing I want to point out is that we also had this SMT here, right? Meaning the NASDAQ failed to take out this low last night while the S&P 500 did. So looking at the hourly time frame, this is kind of what the market looked like going into the hourly. So you can see we had this SMT that I pointed out, right? The NASDAQ failed to take out this low while the S&P 500 took out that low on the 6 p.m. Candle last night. And then we rallied higher over the Asian session and also the London session going into New York Open today. So the first thing I want to point out is that we did have this hourly fair value gap here on the NASDAQ, right? That's an important level to be watching for. We also had one below us here. So those were both two important levels. And then we also had our buy side liquidity resting here, right? So you want to mark that every time frame. You want to be aware of where your liquidity is resting. So we also had sell side liquidity that was below us here, right? And actually, if we go to a 15-minute time frame, you can see it a little more clearly here that going into the New York Open at 8 a.m., we did have this 5 a.m. low swept right at 7:45, and we also had this 15-minute bullish fair value gap, right, that the market traded into at 7:45 after sweeping this liquidity from 5 a.m. So we want to mark that as a sell side here. That was an important level to be aware of going into, or important thing to note going into this morning. We also had this 15-minute fair value gap that we were trading into. So what I saw here essentially was a model that I like to trade every single day and look for every single day. We had a sweep of liquidity into a higher time frame discount array, right? We had this 1 hour buy side imbalance, sell side inefficiency that the market swept this previous low from 5 a.m. into. Then we had a change in state of delivery here, right? So once we got a close above this down close candle from 7:30 a.m., that was essentially a change in state of delivery, meaning order flow was changing now from bearish to bullish, right? And that was verified once this buy side imbalance, sell side inefficiency, this 15-minute BISI got put in here, right? So that told me I had a bearish bias, sorry, a bullish bias going into today because we had this change in state of delivery as well as this BISI get put in. So going into today, I wanted to see now this same model on a lower time frame, right? So it's essentially a model within a model. This same thing, I wanted to see a sweep, a change in state of delivery, and a trade into some sort of discount array, whether that's a BISI, whether that's an inversion, whether that's an order block, something like that. So if we go to kind of fast forward how this looked going into the 9:30 open, you can see we continue to trade higher. And then if we go to our 1 minute time frame, we can kind of look at this a little more clearly. So you see on the 1 minute time frame, we had a sweep of the liquidity here. This was the liquidity that we swept. We rallied higher, had a change in state of delivery, and returned back into it. Then we had some sell side liquidity resting here, right, going into the opening session and here as well. So I was potentially watching for a sweep of either of these lows and then a change in state of delivery and an inversion and some sort of discount array getting put in. So that's the same exact model that I just showed on 15. I wanted to see that as well here, right? Because now I'm aligning the lower time frame with the higher time frame bias, right? You want to align the biases. So the market kind of just traded a little sideways here. And then as we got into market open, you can see we came down at the market open and swept these lows here, right? So I can move that. You can see we had this inversion, right? This bearish fair value gap got put in. So we can go ahead and mark that. Once that bearish fair value gap gets put in, we want to see this low get taken, which we got that here, right? We saw this sweep of liquidity on this low here inside of our 15-minute gap still, right? Market, after sweeping that low, trades higher and now inverts this fair value gap and leaves this bullish fair value gap, right? It leaves a BISI here, right? And so that, again, is a change in our order flow, right? Our order flow is now changing from bearish as we're coming down, sweeping the lows into a higher time frame array. Now we're changing into bullish, right? But to validate it, I needed to see a change in state of delivery as well, right? And that means I need to see us close and displace above this down close candle at 925, right? Because that was the candle that swept this low. I wanted to see that get displaced, right? So although we put in this fair value gap, you could have bought down here, but me personally, I like to buy once I see a close above here, right? This would validate a change in state of delivery in this case. So that's what I was watching for. So you can see once the market opened at 9:30, 9:31 comes and we do validate this change in state of delivery with a strong close. This was a 22-point candle. When we traded back into this BISI, held this inversion, right? And then also what I liked was this sweep at 9:30, right? We swept these lows again, right? So it was another sweep, right? So that is what you like to see before you go enter a trade. You want to see the market manipulate, right? You want to see them to take out some stop losses and to get some liquidity before going in the direction. Because if they hadn't grabbed liquidity yet, you're about to be the liquidity that they're about to go grab. So it's very important to wait for the manipulation, right? This one, we got it here. And then we didn't get that change in state of delivery yet. So we came back down, swept these lows again. And then we got that change in state of delivery. And that's why it's important to wait for that change in state of delivery here, right? That's a very key thing. A lot of people miss that because they're so impatient. They see the inversion, they want to get in immediately. And it can work, but it's better to be safe and just wait for confirmation, right? So now at this point, like I said, we had liquidity resting here. That's buy side liquidity. We also had some liquidity resting here, that internal liquidity. But ultimately, we did have this buy side liquidity there, as well as a new week opening gap right there as well. So I was definitely wanting to see the market draw into those highs. And so at this point, what I did was I saw the market come down. We traded higher. We took out this internal liquidity. And once we did that, I wanted to see us come back, right? We have this BISI here. So now we're definitely in bullish order flow, right? We're leaving BISIs. We have an order block here, right? This is now our order block. So now we have two bullish discount arrays that are below us, right? So that's very key to note. We have now two bullish discount arrays. We got this 1 minute BISI and we have this bullish order block. So now I wanted to see the market return back into here, which we got that here when the market traded lower. We traded into this order block and this BISI, and you can see we never closed below this BISI, right? We never closed below it. That was very key to note. If we are truly going to go higher, we should be respecting bullish order flow, right? We should respect this down close candle. We should respect this 1 minute BISI by not closing below. It's okay if we trade through it, but we should not close below it and invert it if we're truly going to go higher. So once I saw that, I didn't quite enter here. I'm not gonna lie, I should have entered here, but I wanted to really see if this was gonna hold this fair value gap, so I didn't really enter there, and I waited for us to form a propulsion block, which we did here, right? So an order block on top of an order block, I've mentioned multiple times, that's a propulsion block. So we had this propulsion block form here, this order block that trades on this order block, it forms a propulsion block, which that should be what sends the market into its high. So I was waiting for us to return back into this propulsion block. I have my stop loss here, targeting this internal, really a new week opening gap that was resting like right here. So that's really what I was targeting today. So it was a little lower than a 2-to-1. It was about a 2-to-1 risk to reward. But it was something I was really looking to be in and out of, a pretty like quick trade. So I wasn't really looking to be in this long. It needed to go my way immediately, honestly. So I waited for the market to come back. We formed another, we did come back down. Actually, let me replay that because it's kind of hard to show this. Let me see. We came back down and I bought here. I really bought down here, but for the sake of this, it's not going to let me show it. So we traded back into the propulsion block, had my stop loss here, take profit up here. And then the market did coincidentally trade right into the fair value gap, or into our buy side liquidity that was resting there, and our new week opening gap that was above us. So a very quick trade, and you can see it was very algorithmic order flow, right? It was very straightforward, a bullish, very straightforward bullish order flow, right? We had nothing that was disrespected. Everything was holding. All bullish discount arrays were holding, and it was a really quick trade. So ideally, the better entry would have been here, right? Taking an entry here, stop loss, probably right here below this BISI. We had this order block, this BISI, targeting this internal liquidity here. That was the better trade, but I waited because I really wanted to see if this gap was gonna hold. So I waited to use the propulsion block, which is totally fine, but you just have to understand you're getting in at a higher price. And this did end up pushing a little higher before we sold off, came and swept these lows, and then came back higher and took these highs again. So my bullish buys for the day was valid. And this was a great entry, a great trade. And honestly, it was pretty straightforward, really quick. Those are the trades that, you have to be able to recognize quickly, right? With all the signs. And just to recap it, like I said, we had this 15-minute BISI, right? Let me clear these things. We had this 15-minute BISI. That is really what made me bullish going into this day. Honestly, we had this 15-minute BISI. We had this internal liquidity swept here. We had already traded into a higher time frame discount array and swept some liquidity from the overnight session. And so for me, I wanted us to continue higher and to validate this higher time frame model. And I just looked to take my entry on the lower time frame. And that's the best trades. Like I said, you want to be able to align your biases, right? You want to be able to find how does the lower time frame align with the higher time frame. Those are going to be the best A+ high probability setups. One thing I also want to point out is we also did have an SMT here with the S&P 500. This low was taken by the S&P 500 while the NASDAQ failed to take that low. So you can see there's a bunch of confirmations here. Had a higher time frame discount array. We had a SMT. We had a sweep of liquidity. We had the inversion. We had the change in state of delivery. Those are 5 confirmations for me to tell me this is an A+ setup that I need to take, and I can't hesitate, right? So that's a trade I took for today. It could have been much bigger if I got in a little lower, but it's all good. I got in and out, made my money, and I'm done for the day. Get off the charts, go enjoy the rest of my day. So that's all I got for y'all in this one. I will see y'all in the next one.